What's up, people? Welcome or welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. This has been a big week for Tesla. Earning results were released on Wednesday, July 20th, after market close. Not surprisingly, they exceeded expectation, which explains the 13.40% gain for the week and rising above $800 a share, which we have not seen in over 2 months since the market downtrend really kicked into high gear. The last time Tesla traded at $800 or above was here on May 10th. Another reason Tesla made headlines this week was, of course, because they disclosed the sale of 75% of their Bitcoin holdings. That, of course, prompted some panic sell, dropping the price of Bitcoin from just over $24,000 at the time of the announcement to the low $20,000 range. So in today's video, I'll go over a brief summary of the result and forward guidance provided by Tesla, discuss my thoughts on what Tesla selling the majority of their Bitcoin means, and close out with what to look out for as we get into the last trading week of the month. Some pretty significant events taking place next week that you need to be aware of as you think through whether you should buy, hold, or sell any stock or crypto in your portfolio. As always, this isn't to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. That said, I do recommend watching all the way through so you don't miss out on any pertinent information I'll be sharing. Drop this video another like if you haven't already, and hit that subscribe button. Those are 2 easy ways to show your support to your channel and help it grow if you appreciate the content. Lots to go over today, so let's get into it. All right, so let's start with the fact that Tesla has once again flexed on the entire automotive industry and demonstrated why they are the most valuable automaker by market cap. Giga Shanghai was closed due to COVID restrictions for most of Q2, but yet they still managed to deliver 250,000 cars for the quarter, good for a year-over-year improvement of 27%. Total revenue as a result came in at $16.9 billion, representing a 42% year-over-year improvement. I could probably go down the list of all the metrics and you'd primarily see a year-over-year improvement, even though the quarter-to-quarter was a bit lower, of course, due to the challenges. Despite all the headwinds, they still managed an industry-leading automotive margin of 27.9%, and you can see here on the graph how the rest of the competition fares. And so it's not that Tesla is completely insulated from inflation and what's going on in the macro environment. It's more the fact that they've become exceedingly proficient at managing their resources and supply chain. EPS came in at $2.27 versus the expected $1.91. While the Q2 performance was above the expectation, the forward guidance is really where Tesla is setting itself apart once again. They reiterated the 50% average annual growth rate, with Elon pointing out that they were expecting a record-breaking second half of this year, which is pretty exciting when you think about where they are right now with 500,000 cars sold already. Profit will only improve from here on out. FSD beta with City Street autonomous driving is out to over 100,000 customers at the moment. Wide release is expected in North America by year end. So again, super exciting news. On the new product front, Cybertruck was confirmed to have an expected start delivery date of mid next year. And when they say that they have sufficient liquidity to fund the roadmap, yeah, that's an understatement. They're now sitting on $18.9 billion in cash at the close of Q2. For context, it cost Tesla $2 billion to get Giga Shanghai operational, so you do the math. I think I can sum up the Q2 performance as they once again crushed it, period. Now, as exciting as that may be, we do have to talk about the fact that almost $1 billion of the cash added to their balance sheet in Q2 came from the sale of 75% of their total Bitcoin holdings. Elon was quick to point out that they have not sold any Dogecoin, which I thought was kind of funny, and they would be open to purchasing more Bitcoin in the future. Essentially, business needs and a risk mitigation drove the sale, and not the shift in their belief in Bitcoin. After all, they still hold close to $400 million worth of Bitcoin, which is nothing to sneeze at, right? But the reality is the Tesla core business has become so profitable that even without the Bitcoin sale, they would have still crushed it. But this now raises the natural question, is there more downside ahead for Bitcoin, right? If you consider that a year ago, the rally that took Bitcoin to its all-time high of $69,000, well, that was really kicked off by Tesla announcing that they added $1.5 billion worth of Bitcoin to their balance sheet. That sparked a new wave of institutional buying. So wondering if the reverse could happen here is only natural. The answer is, well, it kind of already has happened, except Tesla was not the one behind it, but rather just one of the many contributors to the Bitcoin sell-off. Between May and June, we now know that as much as 236,237 Bitcoin, worth roughly $5.5 billion, have been sold by institutions, and it all started as a result of the Terra Luna stablecoin implosion. This chart here on the screen offers a nice breakdown of each key institutional entity and sell pressure they each applied. From left to right, Luna Foundation with 80,000 Bitcoin sold, Tesla contributed 29,000 Bitcoin, ETF liquidations were good for another 24.5 Bitcoin, Three Arrow forced liquidations added 22,000 Bitcoin, the Celsius bankruptcy added almost 22,000 Bitcoin, collateral damage liquidations as a result of Three Arrow and Celsius added roughly another 40,000 Bitcoin, and rounding out the list were publicly listed miners with just over 19,000 Bitcoin sold. There's obviously more to account for when we think about retail investors, but the bottom line is this. May and June saw the most sell pressure, driving the price down from $40,000 a coin down to $17,000 before bouncing back a bit to the 22K range where we are. Now, this is of course just my opinion, but I find it very unlikely, right, that the entities that still hold enough Bitcoin to materially impact its price lower would be looking to sell large amounts at this point. So think Coinbase, FTX, Binance, Skybridge, Grayscale, MicroStrategy, just to name a few. They are all more focused on accumulating at these levels than selling. So realistically, accumulation is in full swing at this point, and I do expect Bitcoin to reclaim at least a 30K level by year end and flip it from resistance to support. But of course, I would not dismiss what's coming our way next week. That's going to be the wild card that determines if the uptrend we saw this week continues or if we see a near-term reversal with a new low for the market. All hitting next week, mega cap tech earnings for Amazon, Apple, Microsoft, Meta, and Google. Wednesday, we'll get confirmation on what I believe will be a 75 basis point rate hike increase by the Fed. And Thursday, well, that's basically judgment day for the economy. The GDP number will be released, telling us if we are indeed formally in a recession or not. Now, I do find it interesting that with all the noise we heard a while back about entering a bear market, hardly anyone this go around mentioned the fact that this week's rally has officially pulled the SP 500 from bear market territory. And that's obviously in anticipation of a positive outcome next week. And for anyone who doesn't know, a bear market is defined as a 20% correction to the downside. The other thing worth mentioning is the Nasdaq, though still technically in a bear market, was lifted by Tesla's result and is also on the verge of exiting its own bear market. In my opinion, strong megacap tech earnings next week and guidance should be enough to keep that trend going. The last thing I will say is this: expect volatility to spike next week as people trade around the interest rate news, dissect and analyze every word Powell speaks, and the GDP number is announced. Regardless of the recession call, if earning growth still appears to be in the cards based on the guidance given, then I think the uptrend continues. Now, if earnings and forward guidance is weak and we tip into recession, then we'll start searching for a new bottom for the market as stock valuation re-rating will need to happen. Either way, being patient and using those deep red days to DCA will continue to be my approach. I almost forgot to mention that Tesla's shareholder meeting is set for August 4th. We should get an exact date on if and when the stock split will go into effect. Buckle up for next week. It should be an interesting one, to say the least. But on that note, I'll leave it here for today. Don't forget to drop this video a like if it helped you gain a new perspective, and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.